Hello and welcome to another episode of Financial Literacy with me, Sserwanjja, in proud partnership with the Old Mutual Investment Group. On this episode, we focus on the enhanced unit trust. I'm privileged to be speaking with Zac Kisesi. Zac is the managing director of Old Mutual Investment Group. Zac, it's good to have you again.
Thank you so much, Solomon, for this opportunity. And I look forward to a wonderful interaction.
How are you holding up?
Yes, it's fine. We are definitely investing our clients' money. Many of our clients who have trusted us with their hard-earned money. Of course, it's a big task because we need to prudently invest the money. We have to look at risk profiles. Where do we invest this money? How safe is it? What are the challenges that could face, and how can we always maintain our fiduciary duty to our clients? So, yeah, but other than that...
And that comes with a lot of pressure. Come to think of it, you get a client's money, you promise them interest, you have to look at viable ventures. Where are you investing this money?
Exactly. So when a client comes to us, we need to understand what the expectations are. We need to manage those expectations. Solomon, I don't know why it's sad that in Uganda, if you can go out there and promise people ridiculous amounts of return, you're going to get so much money flying towards you, like is the case of so many Ponzi schemes. So that's the reason why I always tell clients, always think about risk before return. And that's the reason why when we're investing, we factor in the potential of getting back that money. And that's the reason why, for example, for a number of clients we invest for, corporate clients, we look at their risk profile, we look at diversifying their assets across asset classes that would preserve their money. We look at risk management very seriously because we look for the worst case scenario and not necessarily the best case scenario, so that we preserve our clients' value.
So that you give them interest. I mean, there's that pressure of accruing interest. A client invests and you have to make sure that that money comes with an interest on it.
That is true. We actually even have what you call a credit committee in-house. So this credit committee doesn't just look at the banks where this money is going. We also look at the quality of the bank. Which kind of bank is it? What is how is their capital adequacy? How are their management systems? How is their solvency? How does this bank perform during market turmoil? How are their assets growing? We look at so many things. So we have to first tick the risk box before we go to the return. And that is what has clearly ensured that irrespective of whether the Strait of Hormuz is closed, like is the case now, irrespective of whether there's a COVID pandemic, we have kept seeing our assets growing because of the trust that our clients have entrusted in us.
The safety of the client's money.
Yes.
Should they go to sleep knowing that their money is well taken care of and well invested?
Correct. Now, one of my lecturers once said that the reputation of a financial professional is not determined during the 15 years of great success. It's during the 1 month where they lost all their clients' money. So when we're looking at risk, we are not looking at all the good months or good years when we didn't have many exposures. We try to prepare ourselves using stress test scenario analysis to make sure that even the worst case scenario, our clients' money is prudently invested and our clients are getting the return on a risk-adjusted basis. Yeah.
And the business is growing. How is it picking up in terms of the numbers of people who have invested into unit trusts?
The beauty about it is that we have seen a significant growth in terms of our assets under management, not only as Old Mutual Investment Group, which is the dominant market player, but also as an industry at large. There's a lot of financial literacy going out there. Many people have appreciated the importance of saving before spending, which is very important. If you look at number of social media platforms, I mean, savings conversation is really at the top of many clients' lists. If you look at Uganda about 15 years ago, we Africans did not have a culture of putting money together like our brothers, the Indians, have had for so many years. So people realized that by putting resources together, you'll go a long way as a group. So that was the birth of the investment clubs. Now, these investment clubs kept on growing, and we started seeing a lot of of money going into the system from people's houses into the system. And then the conversation now progressed from there. The question was, yes, we want to invest, but how do we always have access to our money? And that is actually the gap that the unit trust came to fill in about 10 years ago, because the options that individuals had were mainly, say, fixed deposits. Because if you kept money in a bank, liquid cash, it was going to be eaten up by inflation, of course, which would reduce the purchasing power of your money. You are also going to have an issue of bank charges. And the only options clients had was fix money in the bank. But that did not speak to so many clients, because if I fix money in the bank, I am a trader in downtown and I need to send money to China or something. If I have fixed my money, there are going to be heavy penalties. And those penalties include forfeiting of your interest. And of course, you have to wait till maturity to access this value. So that's the reason why we had to think about how do you create a product that resonates with the public. And that's where the interest came in, to provide liquidity despite the return that the clients were going to get.
Absolutely. And I mean, I'm going to be honest with you. So I'm a client with Old Mutual Investments Group. But the thing that fascinates me most about this is that I'm able to get my money in less than 24 hours. And that really is gratifying, because there's been times where I need this money either to invest it somewhere else or even to meet a certain problem, and that money is given back to me. That's a powerful way out.
It's very powerful, because you see, investing can be looked at in so many ways, and comes with sacrifice, because investing means I'm going to forfeit a current need, a current consumption need for a future gain or expectation. But we're in a country where, basing on what people earn, they do not have a very long propensity to save, in the sense that most people survive on paycheck to paycheck. In fact, if I asked how many of you can survive without 3 months of pay, it could be a very, very tough conversation. So the beauty about that liquidity, that access, is that it's more of a mental game. What we have come to realize with the savings patterns of individuals, that when the individuals get the comfort that they can access money anytime, they end up actually saving for a longer period of time. That has added a lot of value to the people. So you find many companies who actually also give us the operation accounts, because they say this is a temporary parking space, but when I need my money, I have access to it. So that has actually caused a number of people to invest in a compounding vehicle, a vehicle that compounds the return on a daily basis, which simply means, Solomon, that if you invested a shilling today, it's going to double within the next 5 years. And that is going to be that's the power of compounding. And we have seen significant traction in terms of our figures, in terms of our numbers. We are getting thousands of clients opening up accounts. And of course, what we're trying to do now is to improve on that customer experience which we have with our customers, to make it easier for clients to invest, to make them feel safer, and also see how to add more benefits to our product.
Listen, Zac, you've mentioned something that hit deep, and that is, if you lost your job today, would you survive for 3 months? How important is it for us to think deeply about that?
I think it's not hard to look at examples. I don't think there's a family who's listening to this conversation that was not affected by COVID. COVID was such a big, painful period for so many Ugandans, because even those who were confident that they had good paying jobs were in a situation where they did have income. You had people who had assets, like, of course, we call them dead assets. Those are assets which don't generate any income, but they just sit on your balance sheet. So you're looking at people who had a number of assets that could not be liquidated, because there was even a freeze, if you remember, on selling land. But now you had your parent who you were paying about 3 to 4 million shillings a day in the intensive care unit. These are real stories, and I'm sure many people lost people that they loved. And those experiences, if it did not have an impact on you, then something was wrong. Now, what I'm simply trying to say is this, that people realize that the risks, that the potential risks that they have are not very far from them. They are very close. We do not know if you look at what's happening with the war in the Middle East. I mean, you can imagine how it's going to impact the prices of things. Now, in the past, there was a black swan event called COVID-19. Now we have got into another situation. How prepared are you? What lessons have you learned? If you have not been saving before you spend, if you didn't learn that lesson, COVID, there's another black swan event coming to teach you. So what we're simply trying to say is this, that you need to be aware that your earnings now are not sufficient enough to take you through a market turmoil. There are potential for wealth, but they are not wealth in itself.
Wow.
If you do not put money aside, then you're killing the potential you'd have. It's as if you're killing your future. You're eating your present without a future. And that's the reason why it should be deliberate. It should be a painful, deliberate process to put money aside before you spend, because that is the only way you're going to survive a future market turmoil. And it's a discipline that you must have. It doesn't matter whether you have, in fact, statistics have shown that the more money you earn, the higher your chances of debt. Because when you earn more money, there are many avenues for spending that open up to you. For some people who are listening to us, I always say that if you look at how you have been saving over time, you'll be shocked that when you're earning less than what you're earning now, you are saving more. So is saving a matter of how much you're earning? No, it's a mindset. Because there are more spending avenues that come when you earn more. The bank is going to give you money faster than it could have done in the past. You probably want to change the standard of living that you can't afford, because the opportunities that there are borrowing opportunities that open up to you. But as you do that, never forget that the money you put aside is your future. What you're spending now is your present. So if you don't put that money aside in vehicles that will double and triple that money, then you won't have a future. It's that simple.
You know, I hear you. And life happens, Zac.
It does.
You lose your job, you get sick, you're admitted, you know, children have to go to school, and you have no backup. These are real life things. So with that, the Old Mutual Investments Group has come up with a new product or a benefit for the savers or the people who are having the unit trusts. Tell me about that.
You know, Solomon, one of the things that we're very cautious about is the fact that there are many success stories which actually became failures. If you look at Kodak, for example, which is a common story, everybody knows about Kodak. At one time, they were the market leaders, and they chose not to look at the change that was happening in their environment. And digital technology came, Kodak refused to change. They said, we're the market leaders, we are dominant, we won't create any difference. And so when digital technology came, and that's the power of technology, it has the ability to wipe out an industry in a very short period of time. We were seated there and we asked ourselves a question. Fine, everybody knows about the unit trusts, investment clubs, circles, and things like that. So as at the forefront of this change, many clients have kept asking, what next? What next? What else do you have to offer for us? And that's a good thing, because clients deserve to ask for more, because this is a very dynamic society. So there are a lot of changes that keep happening. So we sat down and said, how can we reward our clients? How can we create more value for them? What are some of the challenges that we face? And we observed that, and this is from our analysis, there are so many clients who we have who take money out to spend, where if we created more value for them, they'll retain money over a longer period of time. You see, the power of compounding works only if money stays longer. But if you invest money today and take it after 1 week, then you lose that value. If you listen to some of these great investors, like Warren Buffett, they say compounding is the 8th wonder of the world. But what it doesn't tell you is don't withdraw your money, keep it over a longer period of time. So you have so many people bring money and take it out so fast. So we decided to create an incentive for our clients to keep money for a longer period of time. And we said, how do we look into our wider group? Because we are a group of companies as Old Mutual. And that's when we said, why don't we create a benefit for our clients? And that is an insurance benefit, which is at zero cost to our clients. So that simply means when Solomon, you open up an account with us and invest, you get a benefit, an insurance benefit free of charge to you, but a cost to the company. So this is us giving more value to our customers. And of course, as we go on, we shall dig deeper into that.
So how does that work?
Yes. So Solomon, we always tell our clients, save at least 100,000 shillings, and it could even be more. Some people invest 1 million, 10 million, and even much more. So what happens with that is that once you invest this money, the system looks at the quarterly period, quarterly minimum balance in your account, meaning the calendar year, January to March, April to June, like that, the 4 quarters of the year. And we look at the minimum balance in your account, and then you qualify for a life cover benefit. And this simply means that basing on your balance, it doesn't matter because it's a tiered product. As long as you had a certain balance, the company is going to pay a premium to you, to the life company. And this is a cost to us. So that means in the event that something happened to you, as has happened to some of our clients already who are benefiting from this product, which we just launched in March this year, you qualify for a cover, meaning that in the event of death, in the event you got a disability, we are the life company, which we have partnered up with, is going to make sure we pay you a certain sum. And this is free of charge benefit. So in short, every individual client with us has a benefit, a life cover benefit. And so if you passed on and there were children that you had, and there's evidence that you are paying school fees for them, you also qualify to get that education benefit paid to the schools of your children. That is the benefit, that's the value which we're adding. And this, I can assure you, is just the beginning. We are going to keep on asking ourselves, how do we keep adding value to the saver, to the investor? Because we believe that we believe that our clients who have been with us for a long period of time deserve to get this benefit.
So this benefit, does it vary with the amounts of money that I am saving?
Yeah.
Is there some sort of like bracket? Yes. And what is the percentage of it?
Correct. Now, when you go to for every client, the bit about joining, open up an account with us is that you're given access to your back office. So that is the system where you're able to look at your balances, look at your history of deposits, withdrawals, what interest have you made. So also in the back office, we also share with you the schedule that shows you how you qualify for a bigger benefit based on how much money you save. So the more money you save, it's a tailored product. So the more money you save, the more you qualify to get into a higher bracket with a higher premium. So that is what we call real value. We are creating real value for our clients, and it is actually a benefit that a client does not have to apply for. Every client, every individual client automatically qualifies for this benefit as long as your investments are above 100,000. But as they go to 1 million, it's a different bracket. 10 million, a different bracket. 15 million, a different bracket. And this is a cost that the company pays and picks up.
Interesting. So the magic is in keeping the money safe.
Correct. So the system looks at your balance over the last 3 months. So that's why it's important for you, as you withdraw your money, make sure it doesn't go below certain balances in a quarter. It's because the system looks at your quarterly performance and the benefit rolls for the next 3 months. So it's a rolling 3 months cover, basing on your savings patterns over the last 3 months.
If I don't die in those 3 months, what will happen to those benefits?
Yes, now the beauty with it is...
do they accrue also?
Very good. So if you don't die, remember, this is a rolling 3 months cover, So if you don't die and you have invested money, it moves on to the next 3 months. So remember, this is a cover. In the event that anything happens to you, then you get the benefit. And that's what insurance is. Insurance is a way of managing risk, really. You're just trying to say, worst case scenario, am I covered? And as I said, Solomon, we are still looking for other new things that we can add, value added. I can assure you within the next quarter, you'll be back. We'll be having another conversation of something exciting that we have thrown into the market as well. Because there's a question, Solomon, people have asked that, what if I'm a company? What, do you have any other benefit you have for me? This is mainly for individuals. What if we're a group of people? What if we are a savings club? What if we're an investment club? What other benefits are there? So those are things which we are working around. This is a journey that we have just begun. What we want is to remain at the front of the conversation. Every client should be asking their service provider, apart from interest, what else are you giving to me? That's a very fundamental question, which we want every service provider to answer when the clients come and talk to them.
Does the client forfeit those benefits if they don't die?
No,
or that money is added onto their investment and it accrues interest?
Yes.
And then it goes back to compound?
Yes. The way you look at it, remember, this is a cost to us. So we actually pay the life company that we are partnered up. So it's a cost to us, which we pay every month. So that's why it's not an investment. It's not real cash. It's actually the risk. That's how insurance works. It's actually the risk, and because it's not a cost of the customer, it's not compounded, but it's a benefit. So as long as you have money with us, know that you have a benefit. That is what the thought process is. If you have a friend who passed on and you know they had the unit trust, you can even call and say, I have a friend so-and-so who has passed on. You told us there was a benefit, and our team will be able to handle you. And we have actually made some payments already for some of the clients who have demised just in the last 2 months.
Wow, that's interesting.
Yes.
How about for if I am saving with my wife?
Yes.
They are joint accounts sometimes, I think, with two people, me and my wife, and we opened up a unit trust.
Yeah.
If one of them dies, what will happen?
Yes.
Do we benefit from this product?
That is good. This product is specifically for individuals for now. But as I said, there are some other interesting products we're bringing on board, which will also be able to look at groups. Because, of course, we know whenever we launch something, it creates a buzz in the market. I think this was just mainly to help clients understand, if you're an individual, there's this benefit. But there are some nice, exciting other add-ons we're bringing within the course of the year.
Okay.
Yes,
it's interesting. Zac, so the thing though is, let me ask you a very interesting question because you brought it up. If I died, does my investment go to the person who I have put in my will to take over my investment?
That's a very common question. Now, one, we're a financial institution, so the legal process in Uganda apply to us as well. Definitely, once you've written a will, which the law really considers the true value of a will, it has witnesses, it has executor, and so on and so forth. Definitely, once that information reaches us, our legal department looks at that documentation, confirms the authenticity, we definitely execute as far as the wishes you had were concerned. Yes, so we work like a normal financial institution. So there are so many, the commonest situation for most of our savers who have passed on is that they have died intestate, meaning they died without a will or without a document that can be called a true will. So of course, when that happens, we request for letters of administration, which is also a legal process you have to go through. And when the beneficiaries are determined, the information is brought to us, we have verified who the funds belong to, then we can be able to transfer the investment. The important thing to note is that even if there's a contention over a long period of time, these funds that you have with us continue compounding. We have had people who died 7 years ago, and cases are in court, but guess what? The money that the deceased left 7 years ago has doubled already. So by the time the case is sorted out, actually the estate is much wealthier. So that's the beauty about the power of compounding. Compounding does not stop irrespective of whether you passed on or not. And that's where financial literacy comes in, because unfortunately, there have also been a number of cases where family members come and withdraw all the money once they find out the deceased had money. It's really unfortunate, but what we try to do is that we try to communicate to the beneficiaries and say, look, your father, your mother was smart enough to remain with this investment, see how it has grown. I think it will make sense for you to invest over a longer period of time, or invest in things that add value, like education, things that will push the family to a greater level, because most of the assets which we buy are actually liabilities, which will just drain these assets over the next few months.
Thank you for clarifying that. In fact, I'll tell you, Zac, a friend called me this weekend and said, Solomon, do you have a will? And it was a deep question. I don't imagine dying tomorrow, but I mean, if I died right now, what will it mean for the investments that I have, the unit trusts what will happen to me if I don't have a will. So thank you for making that clear. Let's talk about the education benefits a little bit. Is it a one-off, or does Old Mutual say, I'm going to educate Solo's children until Singapore? How does it work?
Yes, thanks a lot, Solomon. Now, one, death is a one-off event. It does not happen all the time. It's a one-off event. So the assumption is that benefit is paid at the point of demise. But then remember, there are going to be beneficiaries who take over this investment. So for those beneficiaries who take over the investment, the cover will continue, because any person who takes over this investment, it's a rolling 3 months, will pay the benefit, but then the product will continue to run in the names of the new beneficiary. So that does not change. And even if we have paid out this benefit and school fees and whatever that is, the new beneficiary will get this investment, and if they retain that investment, it now also starts a new life on its own, a new cover of its own, and that continues.
Interesting.
Yeah.
So just to make sure that I've understood you right, Zac, when someone dies, there's a benefit to support with the burial, is it?
Correct.
There's a benefit that comes for education of the children.
It's correct.
Do I have to put the number of children, in?
No.
Or it's just a one-off?
Very good. You don't need, there just has to be evidence that you had children you are supporting. That is one. Then,
and they don't have to be my biological children.
Of course, the cover talks about your children, about your children, the people who were your dependents. But remember, it's not only death, there's also critical illness. So you might have been in a situation where you're sick beyond control, you're not in position to work. So you don't, that's also a benefit that you'll get if you give us evidence that that's the situation. But this is a one-off that we will pay basing on your current situation. And basically, it's also important to note that we are trying to provide relief, we're trying to provide real value to our clients, but also at the same time, we want to engage with you better. We want to understand what are some of your pain points, because why do people withdraw money? It's mainly to pay school fees. We have seen that. And so in the first quarter of the year, we see a lot of redemptions. So if there's an incentive for people to keep money longer, you benefit in two ways. One, you get a benefit, but two, your money compounds faster. Because what we are trying to do is we're trying to voluntarily get customers to keep money longer, because that's the true value. Compounding works, meaning interest and interest, works in the long term, say about 5 years. So it means it's a gradual curve. The first 1-2 years, it's not so, it's almost horizontal to the x-axis. But you see, the power of compounding is in the 3rd year, 4th year. So we're trying to get our clients, yes, the benefit's there, but it's just trying to voluntarily encourage you to keep money longer to get the true benefit of why you're doing this. Did you know, Solomon, if, for example, you sat down and you said, okay, I have children that I want to take to school, the university, let's say I want to take them out of the country. So my child is now 3 years old. Let me tell you the power of compounding for just purposes of having a conversation about this. Solomon is just a hypothetical example. Solomon has 100 million shillings and says, for me, I want to see the power of compounding. 5 years from now, that 100 million is going to be 200 million. But that 200 million is going to be 400 million in 10 years' time. And that 400 million will be 800 million in 15 years' time. So what I'm simply saying that 100 million is potential 800 million in 15 years. That is the power of compounding. So this benefit is trying to get Solomon to think of the 800 and not 100 million, so that you don't touch. Savings should be something that you don't touch. You do not touch. It is something that you're saying, worst case scenario, touch this. But there's also goal-based saving and education and health. Those are two very important costs in number of our clients' minds. And you can also add construction or building a house. But these are 10, 15-year plans from now. That 100 million will be 800 million in 15 years' time. And your child, if you add the 3 years when you started, will be 18. In time for the university, in time to build that house, or in time to cater for your medication.
Yeah.
So think about the 800, not the 100, or any other figure. The 50 million will be 400 million. So that is the power of compounding over a long period of time. We want clients to stop thinking about withdrawing anytime, even if you know you can. Think about the next 10 years. Where will your money be? It sorts out inflation. Think about inflation, everything. That is real value. And that is what we are trying to encourage.
Yeah, I hear you. Two last things for me. One of it is controversial, Zac. So the first one is you need this money to invest it for a long time to get to give people a return on their investment, which is one of the reasons why you are encouraging them to save for long, right?
Correct.
Yeah, which makes you in a better position to invest better over a long period of time to get return on investment.
Correct.
Which is really good. It's a good encouragement. But the last one, which could be a little bit controversial, is Zac, for people to keep money in the bank or in this unit trust without touching it, they must have everyday cash flows. You know, you don't go to your savings to get money to fix your car. You know, you don't get to your saving to, treat malaria, or there is need for your clientele. I don't know what advice you would give us, because I'm also your client, not to touch our savings. I mean, people go to touch those savings in unit trust because maybe it's the only option they have to, get money to get them out of a ditch, or even when they are stuck or broke. What advice would you give? Because the action of going to withdraw money from a unit trust is because you need money now. Sometimes maybe if you're a salaried person, you're stuck in the middle of the... So that, I wanted you to speak to that daily income, that cash flows, to, not to focus on the 100 million which I put there as my saving, but I can deal with,
Thank you. One...
And I thought it's important.
Very important. Solomon, I always tell people that the unit trust is a parking spot, but it should not be your core business.
That's interesting. Say it again.
The unit trust is a parking spot. It's not your core business. What does that mean? It means that, Solomon, you're a journalist. The people recording us are cameramen, photographers, and things like that. That is a skill set that has taken you years to develop. And it's a very unique skill set. Now, because it's such a unique skill set, you're expected to earn a high premium, higher than what the interest or a bank will ever pay you. The people whose 9 to 5 of investing in unit trust is people like me. That is my job. But because I cannot be a journalist, then that is why I have to look for a journalist to help me out, if at all I have a story to put out there and things like that. So I always tell people, one, you have to develop a unique skill set. If you're a businessman, how many years have been in business? Do you have access to suppliers? Do you know the transporters? Do you know it takes time to build an ecosystem for you to thrive. Please do not stop doing that because of the unit trust. Go to school if you're a young person, get an education, let it make you stand out. Develop a skill. We're in a generation now of the Gen Zs. Even if you want to be a social media influencer, it takes years to build that reputation. It takes time, reading, associating with the right people, networks, and things like that. Do not stop doing that. Now, when it comes to money, I always say, the mistakes most people make is to invest in businesses they do not understand. So, Solomon, that means you're going to have your money, which you've painfully put aside, and someone will come with a very great business idea. Let me tell you something about a business idea. The best business start is a startup business. And I'm talking about mistakes people actually make. A startup business. If you listen to anybody who's telling about a startup business, they're always going to talk about exorbitant returns and things like that. And it's so captivating. Solomon, I know there's money in transport business. I know it's there. There are people who have succeeded. But I can't tell where, if I get a taxi, I don't know where the taxi will end. But I know if I sat down someone to show me the figures, it will look captivating. You need to have the urge to say no. The only business you should invest in is a business you are qualified in. Solomon, I like the way you talked to the cameraman before our session. This is the angle, that's the angle. It took you years to get that skill. Now, you investing in the cameras is not going to be a loss. If you remove money from the unit trust to invest in a profession or in a skill set that you're conversant with, that money is going to double and triple. But if you get that money and invest it in a business you have no knowledge in, it does not matter how attractive it is, whether it is gold, whether it's minerals. If you do not have the skill set, say no. Say no, because that every business you want to do, people have succeeded, people have failed. Now, when you say no, then that's the bit about the unit trust. We even give you a chance to have 2 accounts or even 3 accounts. There should be an account called don't touch this one, no matter what. It is for my next 10 years. Then there's one which should be for a rainy day. I may not. Then there's one you can touch all the time. So you should also have pockets and live within your means. That is it. But the reason why most people don't have money is because they have invested in investments they have no clue about. And I can assure you, Solomon, if I told someone I'm going to give you 30% return, everybody's going to bring money to me. They don't care where I'm investing that money. And before you know it, I am a capital chicken and I've run out of the country. And it is so painful. I'm speaking like this because I know I'm speaking to people who have been through this. Even tomorrow, I'm sure even today, someone's going to sit down with you somewhere in a bar or even in the church and say, there's this great idea. Someone from China has contacted me, we can import ties at this amount. It sounds, wow, if you look at the figures, Solomon, you're a billionaire in a year.
The numbers are...
The moment the money leaves you to that person, that's the last money use. The rest will be stories and excuses. These are painful stories. Money is so hard to put. If you get your money and someone takes it, it's as good as someone having put petrol and lit that money on fire. Be very tough with your money, hard-earned money. Have the right habits, invest only in businesses you understand, and stick to your lane. Once you do that, of course, people will come with great success stories. It's about risk management. Yes, they have succeeded, but personally, if I cannot control that risk, I would rather say no and stick to what I do best. And that's the reason why I'm in financial services. If you're in farming and you have developed the skills there, withdraw money, clearly you can invest 100% of your money if you're in a business that you understand perfect. So that is my guidance as far as when to touch your money, you notice.
Wow, Zac, thank you very much. Anything else that you think you'd love to talk to us about before we conclude?
For me, it is thank you to the market. The market has been really gracious to us. We have clients who trusted us. 2014, when we got our license to start the unit trust, they trusted us with our vision. 10 years down the road, it's one of the best decisions they have made. As a company, we really treasure what the customers think about us. And we are trying to keep on reinventing ourselves. We are trying to improve on our turnaround time. We are trying to create avenues for our clients to engage with us more. Because we do not want the customer we don't want it to be the cliche of customers should be at the front. It should be, Solomon, we want to reach a point where Solomon, when he hears Old Mutual, he stands and says, yes, these guys mean what they say. So we have seen the trust of our customers grow over the years to the point that now, in the past, people gave us money that they didn't mind losing. Now people are giving us their retirement packages. And I've met clients who say, Zac, if this goes bust, I'm finished.
Wow.
That level of trust is what causes us to really move the team every day to always think about the customer first, in every sense of that word. And for us, everybody in the office is actually in the customer experience team. It's not just a department. Every client calls each of our staff for different reasons, and we are grateful for the business that has grown. We have seen us grow significantly to a number of trillions of shillings, and I think this is just the beginning because of what we have achieved. But yes, so thank you. For me, it's a big thank you to everybody there that is that's our client.
What a conversation with Zac Kisesi, a financial literacy expert, also the managing director at the Old Mutual Investment Group, sharing his heart out on how to invest, where to invest, but also the opportunities that come with having a unit trust account. I hope you learned something. I'm Sserwanjja. Thanks for watching, and see you again on another episode of Financial Literacy in proud partnership with Old Mutual Investment Group.